The world's largest asset manager isn't just investing, they're moving to control the power, water, and energy that keep everyday life running. BlackRock's latest moves target Minnesota Power and essential utilities. Who really decides the future, communities or corporations? This is a moment to watch closely. Chapter 1. From Wall Street to your power bill. When most people hear the name BlackRock, they think of index funds, ETFs, and Wall Street investors in suits. But BlackRock isn't satisfied with just managing your retirement savings anymore. After its 2024 acquisition of Global Infrastructure Partners, the company has started moving into something far more tangible: airports, pipelines, power plants, and even the utilities that keep our homes running. So think about this for a second. The world's largest asset manager, handling over $10 trillion in assets, isn't just buying stocks. It's buying the actual systems you rely on every single day. This isn't a behind-the-scenes player anymore. This is Wall Street stepping directly into your electric bill, your gas line, your broadband. And here's the big question. Do we want a global investment firm with shareholders spread across the world controlling the essential services of American communities? Because once BlackRock owns these assets, decisions aren't just about keeping the lights on, they're about maximizing profits for investors. Chapter 2. The Minnesota Power Takeover Attempt. Nowhere is this fight clearer than in northern Minnesota. At the heart of the debate is Minnesota Power, a utility company that provides electricity to about 150,000 homes and businesses. Its parent company, Elite Inc., is currently the target of a $6.2 billion acquisition by Global Infrastructure Partners. And since GIP is now under BlackRock, that means Wall Street would suddenly own Minnesota's grid. Let's break this down. Minnesota Power doesn't just flip switches. It controls hydroelectric dams, coal plants, wind farms, and even access to valuable land with mineral rights. If BlackRock succeeds, it won't just be investing. It'll be managing and profiting directly from the infrastructure that drives local communities. Think you're a family in Duluth, paying your monthly power bill. Would you feel comfortable knowing it's now being set up by a corporation in New York that reports to global investors, not local citizens? Because that's what's at stake here. Critics say this deal isn't just a normal corporate merger, it's a shift in who holds the power, literally and figuratively. From a community-owned utility mindset, where accountability matters, to Wall Street, where quarterly profits drive every decision. Chapter 3. Why communities are alarmed. So, why are people so worried? Let's put ourselves in the shoes of those Minnesota residents. You depend on your utility for heat during freezing winters, for air conditioning during brutal summers, and for every daily necessity in between. And suddenly, you're being told that ownership could move thousands of miles away into the hands of investors who don't live there, don't use the service, and frankly, don't share the same stakes in community well-being. The fears boil down to 4 big points. First, higher bills. Utilities are already expensive, and when Wall Street steps in, history shows that costs usually go up, not down. Second, loss of transparency. A local regulated monopoly is one thing, but once it's folded into the portfolio of a trillion-dollar firm, good luck getting straight answers. Third, job cuts and cost cutting. That's how profits are maximized. If trimming staff or outsourcing services boosts the bottom line, it's going to happen. And finally, land and mineral rights. Minnesota sits on valuable natural resources, and if BlackRock gets control, those assets aren't being managed for the public, they're being leveraged for global profit. For residents, this isn't abstract financial theory. It's about whether they can afford their next bill, whether their jobs are secure, and whether their community's resources are being safeguarded or sold off to the highest bidder. Chapter 4. Lessons from Michigan's UPPCO. If you're thinking, well, maybe this won't be so bad, let's rewind to what happened in Michigan. In 2014, the Upper Peninsula Power Company, or UPPCO, was bought out by private equity firms. Sounds familiar, and the results were brutal. Within just a few years, customers saw their rates spike 4 different times. Families who were already struggling suddenly found themselves paying some of the highest power bills in the Midwest. It became a vicious cycle. Buy the utility, jack up the prices, squeeze as much revenue as possible, and then eventually resell it for a profit. Who wins? The investors. Who loses? Every single customer is locked into that monopoly. Now, critics in Minnesota are warning. Don't let history repeat itself. The UPPCO case is a flashing red light for what happens when financial firms, not public-minded operators, control essential utilities. And once the takeover goes through, reversing it is nearly impossible. You can't just switch to another power company. These aren't Netflix subscriptions, you're stuck. Chapter 5. The Legal Battle in Minnesota. Here's where the situation really heats up. A Minnesota administrative law judge has already recommended blocking the deal, saying it poses too many risks to consumers. That's a huge blow to BlackRock's plans. But not yet. The final say belongs to the Minnesota Public Utilities Commission, a 5-member panel appointed by the governor. Public hearings were just held on September 25, 2025, where citizens, activists, and even city officials voiced their concerns. And the countdown is because the PUC's final ruling comes on October 3, 2025. That decision will determine not just the future of Minnesota Power, but also set a precedent for whether mega asset managers can buy up local utilities across America. Think about it. If BlackRock wins here, what's to stop them from targeting water companies, gas lines, or broadband providers in your town? On the other hand, if regulators block the deal, it could be a landmark moment in pushing back against Wall Street's consolidation of necessities. Either way, the stakes are massive. This isn't just about Minnesota, it's about who gets to control America's infrastructure in the decades to come. Chapter 6. Clean Energy versus Corporate Profits. Minnesota has set one of the boldest energy goals in the country, 100% carbon-free electricity by 2040. On paper, it's ambitious, forward-thinking, and exactly what climate advocates have been pushing for. But here's the big question. If BlackRock and GIP take over Minnesota Power, whose priorities win out? Climate commitments or corporate profits? Because let's be real, transitioning to clean energy isn't cheap. It takes massive upfront investments in wind, solar, transmission lines, and battery storage. Companies focused on short-term returns often shy away from those costs. And BlackRock, with trillions under management, they can absorb penalties, lobby for exemptions, or simply drag their feet until profits are guaranteed. Advocates warn that Wall Street doesn't think in decades, it thinks in quarters. That means instead of racing toward renewables, Minnesota could be stuck with a utility run by investors who see clean energy mandates as just another line item to manage. Chapter 7. AI and data centers. But let's step back for a second because this fight isn't just about Minnesota. BlackRock's moves reveal a much bigger play. And it all ties back to one word you're hearing everywhere right now: AI. Artificial intelligence is exploding. New data centers are being built at lightning speed to power everything from ChatGPT-style platforms to massive cloud servers. But data centers consume a staggering amount of electricity. Some use as much power as entire towns. And who controls the flow of that electricity? The utilities. BlackRock knows this. Larry Fink, their CEO, even admitted it. We need energy, but we also need the last mile, the power lines that connect to data centers. That's the real prize. By owning utilities, BlackRock positions itself not only as the supplier of household electricity, but as the gatekeeper of the AI revolution. Think about the leverage. If you control the energy grid that feeds the biggest data centers in the country, you're not just making money, you're shaping the future of the digital economy. Homes, towns, AI labs, and Fortune 500 companies would all depend on your wires. That's a level of control no regulator or community can easily check once it's in place. Chapter 8. A test case for America's future. And that brings us to the big picture. The Minnesota Power deal isn't just a state-level fight, it's a national test case. If BlackRock and GIP succeed, it could open the floodgates. What stops Wall Street from snapping up water companies in California, or natural gas suppliers in Texas, or even broadband networks in rural communities? Once the precedent is set, no public utility is off limits. But if regulators block the deal, it could be a turning point. A signal that essential services, electricity, water, broadband, are too important to be treated like another Wall Street asset. That's why the upcoming October 3rd, 2025 decision by the Minnesota Public Utilities Commission is so important. This isn't just about Minnesota, it's about whether companies like BlackRock should have control over the necessities of life. Power, water, housing, and even the energy that fuels AI. Do we really want Wall Street calling the shots? What do you think? Should utilities stay in community hands, or is corporate ownership the future we can't avoid? Comments below. And if you find this video useful, don't forget to like, subscribe, and hit the bell so you don't miss the next deep dive.